Hello, good morning all. We've just ticked over to our scheduled start time, so we'll begin. My name is Craig Sharp. I'm the Company Secretary and General Counsel here at Kinatico. Please note that this webinar is being recorded. A copy will be published on our website following the presentation. Given the number of attendees we have here today, your microphone has been muted. But if you have any questions during the webinar, please use the Q&A function that's available at the bottom of your screen through Zoom. The presenters will attempt to answer your questions during the presentation, or if time permits, we will do so at the end of the presentation. Can we move on to the next slide, please, Tom? As always, Kinatico acknowledges the traditional owners of the many, many lands on which we meet today. Personally, I come to you from the beautiful lands of the Whadjuk Noongar people. I pay my respects to their elders, both past and present. Equally as importantly, please also note that whilst statements of past performance in the annual report have been audited, any forward-looking statements in this presentation are premised on assumptions. We always believe our assumptions are reasonable, but not all assumptions will be stated at length for you today. If you're an investor, you must always take and seek your own independent advice on investments decisions. Next slide, please. I will shortly be handing over to Michael Ivanchenko, our CEO, to begin the presentation. After he's introduced matters and spoken to you at about a high level, he'll hand over to Adelia Saar, our Chief Operating Officer, who will talk about AI in Kinatico. She, in turn, will hand over to Chantal Walker, our Chief Experience Officer, and Jeff Hoffman, our Chief Revenue Officer, who will talk about digital sales and enterprise sales respectively, before we hand back to Michael to wrap up. So now over to you, Michael.
Thanks, Craig. Good morning, all. Before we get into some of the results and some of the details, it's worth setting a context, and I encourage everybody on the call post to have a look in detail on all the milestones on this map from the downloaded versions. But the ones that I want to highlight, the ones that indicate our trajectory, is that in 2017, we achieved our first $10 million worth of revenue after 13 years. In 2022, we achieved our second $10 million worth of revenue after 5 years. In 2025, our third $10 million worth of revenue was achieved after 3 years. That is a trajectory or the acceleration that we intend and think we can continue. Next slide, please. So straight into the results. This year, we have achieved a net profit after tax of $2 million, up 78.5%. Most significantly, that has also equated to an NPAT per employee increase of 105%. This is yet another metric, of which there will be many in this presentation today, indicating the ongoing increase in underlying foundational performance in the organisation. As we continue to grow and accelerate top-line revenue, you can see the foundation has been set to ensure that that is highly accretive revenue. EBITDA increased to $5.6 million, up 28.2%. Total revenue up 35.2 mil to up 9.4%. But correlate that to the fact that revenue up 9.4% while profit up 78%. SaaS now 58.4% of revenue, up almost 12%. And then again, a significant point of cash up 1.6 million to 11.8 million, or up 16%. So it has been a major period of activity for the entire organisation. And another one, and Adelia will go into this further detail, but we've actually increased staff engagement 18 points to 74. In a period of global disruption and expectation from labour forces, from AI and general disruption, we've really seen that our staff have not been disrupted by the fear of AI. In fact, they've embraced it. And I would go so far as to say they're driving it internally. So we see, and Jeff will come on further in the presentation about the performance of Kinatico compliance in market, including our enterprise win. We've got a two-door go-to-market strategy that is working, and that two-door strategy revolves around one platform being able to simultaneously serve the small, medium enterprise market via digital self-service, and the enterprise side of the market with direct sales, and how that has materially increased our addressable market. We've seen a successful transformation to AI as an organisation. We are not an organisation that uses AI. AI is our operating system in the way we function, and Adelia will go through some of those examples further in the presentation. And on top of that, with the engagement we have with our customers and our prospects, we have established a very strong roadmap of upcoming features and enhancements that we continue to take advantage of into the market, and continue to be able to invest ourselves in building them. We have funded this growth ourselves and at the same time increased our cash balance, and we intend to continue to do that. Next slide, please. So why do we believe? We've got a regulatory market and tailwinds, which Jeff and Chantal will expand on further in the presentation, that is increasing our TAM. The quote there we've got from one of our ongoing bits of customer research, and this is very representative of a lot of feedback we get. The intelligence behind our platform is what is attracting people. It is acting on their behalf to take mental, operational, and just time load off their hands, freeing them to do their jobs. Our financial results speak for themselves. We're on a march towards achieving the Rule of 40, and that is accelerating, and we will continue to pursue that. And then on top of that, as mentioned, our AI as an operating system is already showing the benefits, as say that Adelia will come on to. But we're at the beginning of that journey, and we're very excited about what it actually unlocks for us in both operational efficiencies, but also acceleration and enhancement of customer-facing features. So in short, we have the knowledge, we have the product, we've shown we can execute, which is increasing profit year and year after year, and at the same time the market is expanding. But with that, I'm going to throw to Jason Margach to actually go through the numbers in detail.
Many thanks, Michael. Turning to the numbers behind that proof of point that Michael's just taken us through. At a broad highlight for FY26, revenue has grown 9.4% to 35.2 million. Same time, EBITDA grew 28.2% to 5.6 million, with a net profit after tax growing 78.5%, taking us up to $2 million. That is an impact growth of roughly 8 times faster than our revenue. That is operational leverage, and it is visible in our EBITDA margin trend on this slide, which in FY22 was 4.2% and has grown now to 15.9% in FY26. I want to be clear about what's driving that. This is not a one-off cost reduction. It is not a single good period. It's a result of intentional, deliberate, architectural design and structural decisions that we have made. It's allowed us to build and deploy AI agents across the business, and that are beginning to deliver early benefits that we see as a wider organization. This will be covered off in greater detail a little later by Adelia Saw. Thank you. Next slide, please. The revenue mix has flipped. This is an engine behind that leverage that I outlined. Our SaaS revenue reached $20.5 million in the year, which represents 58.4% of our group revenue. This is up 37.5% on FY25, which was $14.9 million. Transactional revenue aligned with our expectations at just under $15 million for the year. Key to highlight, though, on a Q4 FY26 annualized basis, our SaaS revenue is now $22.6 million. Giving that perspective, that annualized revenue on a prior corresponding period was $17.5 million. This is the first year that SaaS has crossed that 50% line, a 5-year trend that shows not a one-off shift. SaaS revenue has grown from 9.2% of our revenue in FY22 to 58.4% as we speak today. 53% CAGR is what we produced for the year. This is structural. It's not cyclical. Next slide, please, Tom. Growth that we funded ourselves. Cash flow Cash flow was $2.5 million in FY26, which is up 84.9% on FY25's $1.4 million. Free cash flow conversion of EBITDA was 44.8%. This is up 31.1%, a full turnaround from a negative 39.4% in FY24. The cash that we generated was $1.6 million over the year, taking our cash and cash equivalents to $11.8 million. This is our fourth consecutive year of rising profit. No raise, no capital raise, no dilution, and we have no debt. We are funding our own growth, which is exactly why we keep investing in architectural and AI agents that I've just referenced. And with that, I'd like to hand over to Adelia, our Chief Operating and AI Officer, to take you through what that architectural is actually delivering. Thanks, Adelia. Over to you.
Thanks, Jason. Good morning, everyone. With the advent of AI, businesses in the tech sector have been asking themselves, do you own the data or do you just move it? Businesses that merely pass data along are exposed, and much of the sector sits here uncomfortably. But this is the difference. Kinatico has 22 years of proprietary compliance data. Our Follow Me compliance is built on our technology. We originate the verification, the result, and the ongoing monitoring. We are not a reseller of someone else's data. We own the data layer. And when it comes to AI, we are an AI organization, not just an organization that uses AI. And when it comes to the use of AI, our governance is already built in, not bolted on. With 22 years of experience in RegTech, we are already trusted by over 8,000 customers to hold the information of their workforces. This naturally extends to how we use AI responsibly. It's the same governance rigor, the same operational principles, and the same audit-ready culture. We are not a business at risk of being disrupted by AI. We are one of the disruptors. Next slide, please. So our AI strategy is operationalized, running on 2 tracks. Track 1 is on the left. It's today's business made better. Inward, we have leaner operations and increased efficiency. An example of this is our 24/7 virtual verification officer. We call her Vera. In the first 30 days, Vera has provided us with an annualized savings of close to $300,000 while also achieving 100% audited accuracy. But even better than that, we are now able to provide customers with instant results 24/7. There is further scope for how Vera will be deployed, but she has absolutely hit the ground running. On the right, we've got track 2, and that's tomorrow's business made possible. This is our growth track. Outwards, we can produce smarter products. With our product and engineering teams using an AI software development lifecycle, we are seeing 50% faster feature delivery and development. This means we are shipping more to customers with less rework along the way. It's the same architecture that drives our inward efficiency that is also what makes our products smarter for customers. This compounds through a virtuous cycle of growth. The same architecture driving inward efficiency and again, allowing us to produce smarter products. Next slide, please. So this is what our smarter products look like. This is just some of our AI in production. On the first slide, we have ChatRef. This is our reimagined reference screening process. Dull, uninspired web forms have been replaced with an interactive AI assistant, not only walking the referee through an engaging experience, the resulting reference captured is insightful while also being efficient. Then we have Iris. This is our intelligent reader input system. The use cases for this are exponential, providing the ability to read any identity or credential document in just a moment. It relieves admins of hours of manual onboarding and lifecycle worker compliance activity, completing in just minutes. And then Agent Vera, which you've just heard about, which is our 24/7 virtual verification officer, who is now servicing our customers 24/7 and providing them with important results instantly. And we have many more agents in development across the business. But of course, none of this is possible without our people. In an AI native company, domain credibility isn't just important, it's existential. We've built our credibility over 22 years. Our customers trust us to provide them with the accuracy that enables them to power their own operations through a compliant workforce. Our people aren't adapting to AI, they are the ones driving it. For us, human in the loop is not just a policy, it's actually where our domain expertise shines. Every AI process is designed with considered confidence and governance. Every AI output comes with a recommendation, a confidence score, an audit trail, and the ability to reconstruct any automated decision. Lastly, there's always an accountable person. Our people are able to use their expertise for higher value activities and have now added to their remit agent supervisor. And all the while we have been doing this, there are global claims that AI is disengaging workforces everywhere. That is not our experience. Our team engagement is soaring, up 18 points in the last 12 months and now sitting 3 points above global benchmarks. Our workforce is backing Kinatico's strategy and they're enjoying it. Over to Chantal, our Chief Experience Officer, who's going to take you through our go-to-market.
Thanks, Adelia, and welcome everybody. Good morning. So most SaaS companies have a dual sales strategy. And so while this approach itself is not new, it's the fact that we are running both off the same platform with the same compliance engine. And this is what most companies can't do. Normally, enterprise grade software is too complex for SMEs to self-serve. And on the other end, self-serve products are usually too shallow for the enterprise buyer. Kinatico Compliance is proving that we are product market fit at both ends simultaneously without splitting the product. That's what de-risks our dual go-to-market strategy. We're not diluting the focus by chasing two markets. We are actually gaining operational leverage, which Jason talked about a lot, and Adelia, from one solution. Follow Me Compliance is an example of this. It's credible. It's not just a feature. It allows organizations to feel in control and stay on top of a dynamic workforce of compliance changes across the entire employee lifecycle as the employees move roles or move locations. And this portability we see as well as a retention moat because all of your workers' compliance records now live within Kinatico Compliance, and it's much easier to stay than to leave. Next slide, please, Tom. Since the launch of KC, as we call it, or Kinatico Compliance, as you can see on the slide, we have signed up 75 digital organizations through the self-serve channel. And these have come from a multitude of industries, as you can see on the left-hand side, and organization size on the right. And this horizontal spread de-risks our traditional customer industry concentration. If you have a look, you'll see there's 19% of organizations who've signed up who have more than 200 employees. So what we've proven out is that this self-serve approach actually works across the whole size spectrum of organizations, not just at the SME end. And we've embedded self-serve as a standalone acquisition channel in its own right. In addition to this market data, we continue to test and refine our go-to-market KC feature set through both quantitative and qualitative research. And we've added some quotes at the end from the research, and you saw one earlier on from Michael on his slide. So organizations, regardless of size or industry, they have an increasing need to feel in control and stay on top of the very complex people compliance. It gets more and more complex every day as organizations become multi-layered and the nature of workforce is changing. In addition to this, it's becoming more complex due to regulatory requirements, which Jeff will take you through in a bit. Features like Follow Me Compliance, being audit ready at the drop of a visit, or having universal visibility of your extended workforce, which includes contractors in many instances, with actioning mechanics that close that loop is what makes KC unique. Next slide, please, Tom. So before we had Kinatico Compliance, the addressable market for Kinatico was structurally capped because we concentrated our sales efforts on the enterprise market. So Kinatico hasn't just added a product with Kinatico Compliance, it's unlocked a market that was previously unaddressable, given the old cost to serve model. The digital self-service model has proven to be an economically viable way to reach these small to medium organizations profitably. And as you can see, there's about 500,000 of there, which is available in our SAM. This has given Kinatico a credible way to get a share of the 1.2 billion RegTech market that we couldn't previously touch. And with that, I'll hand over to Jeff to talk about our enterprise customers.
Thank you, Chantal. Good morning, everybody. Let me bring this to life with a real example. So what I want to start with today is a win that best captures where our enterprise strategy is heading at Kinatico. And that is the customer you see on our screen here, which is Civio. So Civio, they are a workforce accommodation business here in Australia. They're listed on the New York Stock Exchange. In Australia alone, they manage around 10,000 rooms across 12 villages, plus 16,500 rooms in client-owned sites. So with about 2,500 staff and a larger contractor base that sits on top of that. Civio is part of a much larger global group operating across Australia, Canada, and the US. And to be clear, what we have signed at this point in time is the Australian business. When you're running sites at the scale as Civio are, not knowing in real time whether people on site are compliant is not a paperwork problem. It becomes a safety and a legal exposure problem. Now that's the words that you'll see on the slide that have come from Civio's National P&C Manager, Ali Barfoot. Quote, "Their business can't afford to wait, and knowing instantly who's compliant isn't a nice to have, it's essential." So KC now solves that specific problem for them, which is a good win for them and a good win for us. And we're seeing the same shape of problem everywhere we look, whether that's across aged care, childcare, healthcare, not-for-profit, multi-stakeholder RFP-led organisations. And after winning Civio, we're sitting on a solid qualified pipeline of 12 mil plus, and we like the trajectory that we're currently on. Businesses want a way to see and manage risk across their whole workforce, not just at a point in time. And as you can also see on the slide, that's why we're also building out a formal partner program in FY27. With AWS already being a partnership that we've got underway, this will give us more reach to businesses without stretching direct sales. Next slide, please. This was touched on earlier by Chantal and also Michael. The rules are getting harder. Civio's problem that they've got is not unique. It's happening to every business in every sector we sell into, small or large, every sector across the board. Right now, a business in aged care, childcare, healthcare, mining, not-for-profit, you pick any of them, is being told by a regulator, you now have to know more about your people faster. Now that leaves no room for error. And as you can see on this slide, these policies and procedures and regulations are a small sample size of what they need to manage to on a day-by-day basis. If we actually put all the policies and the procedures and the processes, etc., in 10-point format on this slide, it would fill up plus some. So that's the complexity of the world that these organisations and businesses are working in. None of it's optional, none of it's going away, and it's only compounding for every organisation and every business in the marketplace. They have more contractors, they've got more subcontractors, they're multi-layered organisations, they've got more casual workers, which means more people to track, not less. So the pressure that Civio felt isn't a one-off, it's the same pressure building across every customer conversation that's happening in market and we're having right now today. That's why we're not betting on one new regulation or one new law or one industry. Every time the bar goes up anywhere, it makes the case for Kinatico compliance as being stronger. And Michael, I'll pass back to you. Michael, you're on mute.
The number of times we say that in internal meetings. Thank you, Jeff. To summarise and answer some of the questions that we've got that have been posted there, we're seeing the increased operating leverage in the results, the foundational work, the the development underpinning the entire strategy to give us the operating leverage, the accretive growth, all of the things that we are targeting with accelerated top-line revenue growth, is to make sure all the pieces are there so that as we add and expand, more and more of that falls to the bottom line. So the fact that we've managed to do that as a microcap, while we've increased cash on hand, we have continued our investment in the platform, we have driven new sectors and new markets, is testament not only on the ability to execute, but also the market opportunity. And we've seen that in the evidence of 75, it's now exceeds that, plus SME sign-ups, CVO, and we've got others that are in negotiation. There's a question there of how long did it take to win CVO? That was about a 4-month exercise to answer that question. The way that there's another question there immediately posted of how long that is going to take to roll out. That'll roll out progressively by then over probably the next 3 or 4 months to start getting up to reasonable volumes. But with all of these type of enterprise platforms, this is more about the internal change management exercise of rolling these things out than it is what was previously getting the technology turned on. We will get that technology turned on within this quarter. And then hopefully, if things progress as we hope, the other enterprise opportunities that are in negotiation will continue positively also. But combined of those two things is the fact that the dual strategy is working. The idea that we can have one platform but different outlets and different reaches is being shown in the results. But then combined with that is the fact that we've got an organisation where engagement is actually going up during this time of AI disruption, not going down. The significance of that cannot be understated, because that is what gives us the velocity, the ability to innovate, the ability for staff to actually contribute, all staff, in terms of ideas and thoughts, etc. It really is an amazing achievement by all of the senior leaders in Kinatico to achieve that. Then moving on to Vera. So really to point that out, I mean, how many articles can we all read at the moment about what is the ROI in companies on their AI investments, and beyond the hype, what does it mean? And here we get, within 30 days of us launching Vera, we've already identified $300,000 of annualised operational savings. And we're at the beginning of that journey. We've already deployed even more Veras across the organisation. And as Adelia outlined, we have many other agents coming in. So it puts us in even a better position in terms of the scalability of the business. And, you know, not to shy away from the fact that over the past 12 months, our share price has been caught up in the global software de-rating. But our fundamentals have gone actually in the other way, and we believe it warrants a re-rate. You know, looking at all of the things that we are doing and continuing to increase our cash balance while at the same time continuing to invest, etc. So across the board, we see that AI is working for us, not against us. We have got a proven track model, 2-track model that gives us more ways to grow than ever. And we believe we are very, very well set up from where we want to head from here. But with that, next slide, please. I've answered some of the questions along the way, but to have a look at a few of the others, the questions there is, what did CVO have before? A myriad of systems. We did have a relationship with them previously, but what we have done now is consolidate numerous of their systems into one piece of visibility. Scrolling through, Jace, can I just confirm annualized SaaS number? You did cover off that. There's a couple of questions about that.
Can confirm I did, Mike. 22.6 million annualized on the Q4 number.
Thank you. And question on our plans to sell the AML rules to accountants, lawyers, and real estate agents, to SMEs, etc. Chantal, do you want to expand on that?
Yeah, sure. So obviously that was quite a big change for many organizations which previously hadn't necessarily been under the strict rigor of other organizations. And that really, as you know, was tranche 2, for those of you who don't know, obviously an AML, and it went to people in real estate, gold and silver agents, etc. We did a specific campaign which was multi-layered. We had Craig run a webinar for us as our general counsel as to what does it mean, what you needed to get ready. The laws came into effect July 1 and obviously needed to be completed and have your systems in place by the end of the month. And we saw, as you would have seen in the pie chart, a significant number of real estate agents sign up to us as a result of us taking advantage and explaining to them what was AML and what they needed to do. So again, like Jeff said, we're not banking on one-off regulation, one-off change. As these things come about, we are ready. We'll explain what you need to do, and we will help you with our solution, take away the pain so you can actually get on with running your business.
Thanks, Chantal. There's a couple of questions there about the pipeline. Was previously around having it was 12 mil plus, and then we've won Civio, which means net result is actually continued to grow at similar levels to what it was growing before. But taking out Civio, etc., means reported is at 12 plus. But as Jeff mentioned, we're very comfortable with its trajectory. There's another question, which is one that I do get quite a bit. We've got a increase in cash balance, and what do we do with it, and what do we look and how we grow? We are constantly on the lookout for how we can actually look at either market expansion inorganically or acceleration of or extension of product features, etc. What we're not going to do, though, is deploy it willy-nilly. The idea that just because it's there and we can try and throw something as an option to actually expand quickly. We have very strong due diligence rules about what we approach and what we've looked at. To date, we have not found anything that we were willing to take on that met those requirements. But that is an ongoing requirement and an ongoing component, with the other one being we always have, and we've spoken about our international opportunities and what we want to do there, and looking at some of those opportunities in Southeast Asia. They have progressed in what we are looking to do, and so we are in a very good position that we have the resources to continue to invest and ensure that we progress positively. There's a question there about how attractive is the Southeast Asian market to us. Very is the short answer. Our development base is in Vietnam. We have strong relationships across Southeast Asia, and looking at those opportunities are always front of mind. I think they're the ones that I can answer off the top of my head quickly. There's a final question there that I can answer. Does the 22.6 exit ARR include Civio? No, it does not. All right. With that, let me thank everybody for joining and your ongoing support. And we look forward to providing more updates and positive news in the future. Thank you very much.